Hi, everybody. Welcome to Founders Live Conversations. My name is Luis Santazana. I am here today with Fabio Faschi from StartSure. We're going to talk about all things startup business insurance. Fabio's got a great program for you. Fabio, hello. How are you doing today?
Hi, Luis. Thank you again to you and the team at Founders Live for having me today. Excited to talk about this.
Yeah, it's been great having you in our partnership program. Um, we are sending people who ask about insurance needs on our voting forms and on our registration forms. We're sending them directly to you, introducing them to StartSure. But one of the other things that we like to do is introduce you to the rest of the world, and through a conversation like this, you've got a great slide deck set up that can introduce us to everything that you need to talk about, everything that founders need to know to get the table set um, for uh, for asking questions later. So, how it works, everybody? Fabio is going to talk. We have a chat. You can ask your questions in the chat. I'll be reading through that, and I'll ask Fabio the questions once he's done with his presentation. And then anybody else that wants to, hey, we are going to be having people on screen. That's fine. Just make sure you keep your microphones off. Um, Welcome to everybody. Last thing I want to say at the top of the show, I'll bring this up at the end too. Our primetime pitch challenge deadline for entries ends tomorrow, end of day. So you still have time to get those pitches in. Video pitch, 99 seconds, get it in there. Amazing prizes. Win a chance to go to New Orleans for our athletes event next year at the Super Bowl. $10,000 in cash and prizes. It's a great way to challenge yourself to tell the world about your startup and get votes, and everybody can win prizes with just 99 votes. Anyway, let's get on to the show. Fabio, let's see those amazing slides, and I will go on mute, and everybody else will too, and we'll just listen to you, and we'll pop back in when you're done.
Awesome. Sounds good. And thank you again, Luis. I'm going to share my screen here. Let me know that it's coming through. It looks like it is.
Looks great.
Awesome. And we are good to go. Well, thank you again so much, the Founders Live team, Luis and Nick Hughes, for having me today. As Luis mentioned, my name is Fabio Faschi, and here we're talking about how to navigate insurance as a startup, as a founder, as an early stage company. And my name is Fabio Faschi. I am head of sales at StartSure Insurance Brokerage, been in the insurance industry for a little over 10 years at this point, worked with several of the brands on the insurance side. I'm sure you guys have either interacted with or recognized from their commercials online. I've done my tour of duty both on the insurtech side as well as the traditional insurance side, as a national broker in just about every form of insurance you can imagine. So let's get into insurance and talk about specifically StartShare, what we've done and how we've approached insurance for startups and founders. So insurance, unfortunately, was first ideated, and wasn't always going to be a one size fits all solution, and certainly still isn't today. And insurance today is still facing the problem. It's not built for the needs of startups and small business companies that are particularly innovative or unique. And so oftentimes my conversations with founders are going to force them to choose between what they feel is the choice between expertise or simplicity and accessibility to insurance. And sometimes these startups are poorly served on both ends. And so StartSure, we exist and were created to solve that mission by living in this nice top right quadrant here to address like how can we help the gap in the 40% of businesses that are being under or uninsured entirely today, right? And you see here, we exist at the crossroads of tailored and comprehensive solutions for clients while making it quick and easy and accessible for them as well. And I'll let you guys fill in the gaps of where your past experiences might live on this chart. But what we wanted to stay away from, of course, is boilerplate policies that don't address your actual risks and exposures, and a slow and clunky insurance process that frankly is outdated with the consumer experience for every other purchasable product that exists in the world today in modern technology. So my typical conversation as a broker, both at StartSure and in my prior lives, right, is based around the concept of, well, when do I need insurance? And like, even if they know they need it, they know they need to do it, but they can do it later, right? And unfortunately, for obvious purposes, insurance exists with the notion that you have to get it before something occurs, right? It is how you hedge your bet at the casino of life. And so our goal again is to make that easy. And today I want to specifically talk about the how and the when a startup should consider insurance along their growth journey. And in the world of startups, as you all know, as a new founder and CEO of a company that is fast emerging, you are likely growing very fast and changing your organization, your services, maybe even your actual product on a monthly basis. And so your exposures, which is what insurance looks at, are going to be changing equally as fast. Before we get into it, obviously, I want to give the disclaimer that insurance is a very tailored product, as you guys can imagine. And here I've called out some very specific and specialized industries that exist in the insurance world. And I'm sure you guys can use your imagination as to why insurance might view some of these industries differently. And it's not necessarily always that they're hard to insure, that markets don't exist for them, but it is that they require a different lens of approaching coverage or consideration. And we look here some obvious standouts in healthcare and construction. And these, you notice a common trend among some of these. They face liability issues that potentially have a much larger output of what's at stake. Healthcare, obviously, with the lives of individuals, construction with massive property claims. And then you see some other things, some emerging markets on the technology and infosec side, one of the highest evolving markets, on a monthly basis in the US, with most recently the advent of AI, and obviously, 25 years ago with the advent of the internet, and how these industries have evolved. And insurance has always been there, right? Since the first insurance policy being written in the late 1600s has always evolved with the technologies and the industries that are evolving over time. And so because of that, it evolves on the basis of specializing for these industries and giving them special consideration in each one. And you might say, well, Fabio, this is annoying. Why do I want all these particularities when it comes to insurance? But on the other hand, you could approach this from a different perspective and say it makes perfect sense that a real estate company faces a very different insurance exposure than a hospital, for example. And so the caveat here today is obviously the information I'm going to give you is meant to be an overview of journey and maybe to give you a framework of how to approach insurance. It is not going to be the all-encompassing solution. And I'd invite you all to ask specific questions along the way as well. If you do have specific questions tailored to a particular sector or industry, so I'm more than happy to chime in on that as well. But the framework that we're going to be approaching this with is, again, from an information perspective for you guys, what insurance coverages exist. And we're going to be covering the core coverages that exist in the commercial business side. When would you need each coverage? And lastly, the number one question I get asked when it comes to a client, of course, is how much will it cost? And again, giving you an indicative framework of what that looks like. But first, let's cover some key insurance terms. Many of you probably have dealt with insurance, are familiar with these. Premium, right? This is obviously your cost at the end of the day. This is what you are paying for your insurance, typically on an annual basis, or potentially if you have it set up for different billing installments. But this is what you're paying out of pocket, right? This is what you're paying out of pocket when you're purchasing the policy and paying for it as a service. Your deductible is what you pay in the event of a loss. So when you face a loss, you have to pay this amount out of pocket before your policy kicks in. Sometimes you'll notice in commercial insurance, this is referred to as a retention, a self-insured retention. That means you, the insured, are retaining that amount of the policy. You are self-insuring that amount. The limit, that is the maximum amount that the insurer will pay out for a claim. This is typically when you go to buy insurance, right? You're getting $1 million policy, $2 million policy, et cetera. This is the amount that, the total amount that is available to you to be paid out. It is not what you're going to get paid out flat. If you have any sort of claim, Hollywood has done a great disservice to the industry by making insurance fraud seem very simple, that you have any kind of claim and they'll just pay out the limits on the policy. That's not how insurance works, unfortunately, or rather, very fortunately in my case. The named insured, that's you. That's the entity that's purchasing insurance. Again, for commercial insurance, typically an entity is very important. While individuals can certainly purchase commercial insurance, again, it's the entity that's being insured. It's obviously, as your company continues to grow, is usually going to be some sort of a type of business corporation or an LLC or what have you. The additional insured, this is often someone that might require you via contractual obligation to list them on their policy. That gives them certain benefits to tap into your coverage. And typically this comes up as a contractual obligation. Those of you who work in businesses or building businesses that work with several partners, you will often get requests from them to add them as additional insureds on policies. And we always help navigate partners that are navigating how the additional insured comes to play, what those requirements look like, and what it means to your policy. And lastly, the certificate of insurance. Certificate of insurance is ultimately, at the end of the day, the piece of paper that is your proof of coverage of what you have in terms of your insurance and what kind of protections are afforded to you. That is issued by your insurance company or your insurance broker in this case. So for any of our clients that are insured via StartSure, we issue their certificates of insurance that tell them the full slew of policies that we are insuring them on. So let's get right into the first coverage that we're going to be talking about today, which is general liability. And I have it here structured as general liability, or BOP, which is short for business owners policy. And I put these together because while they are typically separate coverages, a BOP policy is actually the more common policy purchased for small business owners and sometimes startups, because it is really essentially a combination of coverages. And those coverages are the general liability portion and the property portion. You'll notice I have here the trip and fall coverage. The general liability is often referred to as trip and fall coverage. This is if you have a client on your business premises, and you have a faulty staircase or what have you, and they trip and fall and they hurt themselves and they sue you. This is your liability that comes to protect you, right? General liability insurance protection says here for bodily injury, property damage, as well as personal and advertising injury. Now, those are the three main components. There are additional components that can be manipulated on certain policies and certain providers. Again, this is being one of the most common policies that exist in the space, is highly customizable based on your business practices and what it is that you need. So when do you need this coverage? Well, typically the trigger for needing this coverage, you'll need this coverage, and it's often required when you're leasing an office or working out of an office, or obviously if you own a building and an office, you're going to want the property portion of this coverage as well. And so that's your trigger for knowing when you need this coverage, which is often why this is one of the first coverages purchased by a small business or Main Street shops as well, is going to be that general liability coverage, which can be customized into a business owner's policy. Secondly, we're going to be touching on inventory insurance. Now, inventory insurance, again, with the outbreak recently in the last 10 years of e-commerce companies continuing to grow in size, inventory insurance is very prominent. And this is very important here for any business that stores goods in a fulfillment center, a 3PL, something like that. And when you're storing goods at a warehouse, why does this matter? Well, the warehouse itself has its own insurance, but your goods inside are only insured insofar as the liability or the responsibility of the warehouse in terms of not damaging your goods. So for many small companies that are emerging today and building a product that they are selling and storing out of a warehouse, it's essential for them to consider inventory coverage, because if something happens at that warehouse and their stock is completely destroyed, the warehouse isn't going to cover them in full or at all in some matter. There is often some small portion of coverage that can be afforded to them, but it's not going to be enough to replace your stock. And unfortunately, this can be devastating for early businesses. Now, we at StartSure have developed a proprietary solution to this. So we have gone to market to address this gap, even in comparison to traditional insurance, with the world's first dynamic inventory insurance policy. And I encourage you all, if you are an e-commerce company or a CPG company, to check out our website. You can get inventory insurance quoted in 60 seconds or less. Super simple and super streamlined. And we're very happy that we're saving around 40–50% of the average cost of inventory insurance to clients in that regard. Next, we're going to move in again to the advent, of course, of cyber data and cyber technology and cybersecurity, cyber liability, right? And this is protection against hackers, crashing, stealing your site, your customer data, the breaches, the ransomware coverage that comes with it, the cost of restoration of your actual equipment that's used in processing your data in the online forums. So as more and more businesses have moved online nowadays, or at least have an online component, this is an essential coverage. And what's important to keep in mind here is technically, again, you would want this coverage as soon as you launch your website. You have an online component, you are unfortunately, a potential victim of cybercrime. Around 82% by last numbers of cyber crime victims are small businesses. They're not going after the massive enterprises that have layers and layers of protection. They're going after the new small businesses that have just launched their website, because it takes very little for them to get in there and circumvent what's at stake. Unfortunately, ransomware attacks are only increasing. And with that, yes, the cost of insurance has gone up a little bit, but very little in terms of proportionate to honestly what is being paid out on them, unfortunately. And again, with the advent of technology and even AI, it is a double-edged sword. And there's been a lot of thought pieces written by people certainly much more educated than myself as well, in terms of what the advent of new technology brings to the cybercrime form as well as the cybersecurity form. But in short, cyber liability, right, is there to protect you and your data and your client's data if it is hacked or breached in any such way. Next, we're going to move on to professional liability. Professional liability, also referred to as E&O insurance, which is short for errors and omissions, is to protect you if your advice or services cause someone injury or financial loss, right? And again, if you are a business that provides training or guidance or services to your customers, such as a consultant, a life coach, something to that effect, you're going to want to purchase this coverage. So the moment you are providing services to a customer or a client, and we can touch it prior to the cyber side, technology errors and omissions or technology professional liability. If your platform is providing these services, you're going to want to address this coverage gap in terms of how you are protecting your own liability for the services that you're providing to others if you make an error or omission. I myself, as an insurance broker, I have my own professional liability. My professional liability protects me for, if I were to make an error when advising someone regarding their insurance, if I were to mistakenly bind the wrong coverage for them, and then they have a loss and it's not covered because I didn't fall through or I messed up their application or something, that would be an error and omission on my part, and my insurance would kick in to protect. Product liability. Again, if you are selling physical products, now this is going to be a no-brainer because this is the liability that comes from potential damage caused by your product to any of your clients, right? If you are selling a toy with a lithium battery, if you are selling any kind of chemically altered product, whether even clothing that could potentially cause allergen cause to someone, or you're selling baby products. Baby products, unfortunately, have come under fire recently again because they have resulted in a number of crimes. Because ultimately, infants can interact with them in a number of unintended ways, and it can cause damage to the clients. And ultimately, product liability exists to address that gap to protect you in case a claim arises from the usage of your product. And you're going to need this coverage the moment you start selling physical products. Again, this can typically be bundled as either part of your general liability or your business owner's policy. So again, can be customized in, but the coverage component of product liability is absolutely essential if you are a business that deals in selling a physical product and putting it in the hands of customers. Now we're moving into the directors and officers or management liability broadly realm. And this is protection for your executives and board members if you're sued on decisions made on behalf of the company, right? So you're sued by stakeholders or the investors of the board, or you're sued even by regulatory bodies in terms of how your business is being conducted. And you see this stuff in the news all the time of our friends Elon Musk and Mark Zuckerberg, and how they come under fire and how their policies may potentially come into play to protect them because of how they take the directions of certain companies, how they're handling certain companies. And really, you'll need this coverage as soon as you raise venture capital funds. And usually, your board of investors will be there to remind you that they want this coverage in place as a protection for themselves as well. And so, this is part of the management liability suite. And again, it's an internal protection for the company to protect you for the management decisions. And lastly, we're going to touch on workers' compensation. Workers' compensation, again, another no-brainer coverage because really, as you hire your first employee in most states in the United States, it's going to be required, and you're going to be told to purchase this coverage. If you work with a PEO, especially as a startup, if you work with a JustWorks or something like that, they're able to provide this coverage for you in-house and tie it to your payroll. As you continue to grow, you're going to need more and more of this coverage, again, proportionate to the employees that you're hiring. But again, it is a first state requirement. So as you hire that first employee, you're going to want to look at how you are getting them that workers' compensation coverage. This coverage designed to protect your actual employees and your company if those employees are injured on the job. Right. Because again, if like your employee in the example here, they have an accident on the business trip, the workers' comp's going to jump in to protect their lost wages and their payroll and their medical bills and protect your company from lawsuits and from them being put in a position where they're endangered in this case. So here is a very summarized table here of what the venture journey looks like for a startup, again, in proportionate to these coverages that we've discussed. And you see here a new venture startup from the zero or pre-revenue company up to 1 million in revenue. The first two core protection buckets are going to be that general liability, that property liability, and their professional E&O and product liability. Again, if they are a company, if I start, Fabio's sock company today and I'm selling socks, and if I have a physical storefront, I'm going to want to have a BOP policy to protect me there, both for my general liability and the property that I own or that I'm renting. And then secondly, if I'm selling a physical product, in this case socks, I'm going to want product liability to protect me in that regard. Now, if I were offering services in addition to that, maybe custom, custom tailoring advice around those socks or what have you, then maybe I'd consider the professional, as well. But in this case, for that example, probably not so much for that product. But here we see then in the second stage where companies, when they're launching an online presence, they're collecting client data, cyber comes into play. And then lastly, the scaled startup, we're looking at all these coverages, right? From the D&O side, and the workers' comp are getting involved as well as you start to hire up employees, as you start to get a board of investors involved and you have funding, you're going to want those protections. Now, again, this is a high-level overview of the coverages that we've discussed. Alongside the D&O, there are additional internal protections for your executives, crime insurance to protect you for crime that's committed internally by the company, employment practices insurance to protect you against harassments, lawsuits, and things of that nature, as well as fiduciary insurance. You're responsible for for the health benefits and other 401k benefits for your employees. If you fail to act as a fiduciary in providing those to them, your liability needs to be protected in that regard as well. So, but in a high level overview, especially for in the startup world, these are the coverages that we see in the typical cadence that we see. There are always exceptions to the rule, of course. If you don't have a physical product that you're servicing and you launching, and your first step of launching the company is launching a website and you're collecting client data, then obviously the cyber comes on day one. Right, the cyber insurance would come on day one. If you're hiring company, if you're hiring employees pre-revenue, then yes, you're going to need to get workers' compensation coverage right at the gate. And then lastly here, we've broken down the average kind of starting point, if you will, for a premium monthly of what you can expect to pay there, as well as the annualized. Now, again, these are starting points, and some of you might have had insurance that was much cheaper, much higher than this, including these coverages. As I mentioned before, insurance is highly specific and tailored to the industries, to the exposures, to the size of the company. So this does, of course, vary. But this is to give you some indicative range of what you can expect as your company is growing. The margins and the ratios between these numbers are actually far more pertinent, if anything else. And again, just calling back here to summarize some of the triggering events that we looked at today, because this is really the framework that you can approach insurance when you're managing your insurance portfolio, you're having the discussions with your insurance broker. This is how I approach insurance for my clients as well. It's always from their needs perspective first, and what they're actually doing with their business operations. We see here, right? You're leasing or owning a physical space, a general liability policy, a BOP policy. You're storing products and goods, your inventory insurance, right? You've launched a website, cyber. You're providing services, advice, or training, right? Professional E&O. You're selling physical goods for products, product liability. And again, as I've mentioned, you raised funds or have board members, your D&O insurance. And again, when you're hiring those first employees, your workers' compensation. And important to note here, of course, I've given here the outline and the framework for when these coverages are purchased. But the other very important part of my job as an insurance manager and advisor is based around how we grow the limits and the protection of your insurance as your business grows. Always the bittersweet moment we have when as a business grows, their insurance premiums go up, but it's a good sign, because if their insurance premiums weren't growing up, it would mean that the business isn't growing either. So it is a proportionate growth between the two, but you're always going to be obviously making far more revenue than you are paying for insurance. And so that is the trade-off there. And hopefully, again, this framework has been helpful for you guys in terms of, as you're in the ideation stages, or even just considering what insurance is out there, as I know it can be a confusing world. This will give you some framework, some landmarks of how you can consider key triggering milestones in your startup's journey of when you need to be considering certain coverages, or at the very least understanding what kind of coverages exist out there for you to interact with. So that's all I have for everyone today, but I'm more than happy to take any questions. Thank you again for the Founders Live team for having me today, and hopefully this was useful for everyone.
Wow, that was awesome. I really enjoyed that. Now, I know you kind of described insurance as not necessarily the most exciting thing, but I think you did a great job of making it relevant to the startups and making it interesting. Your expertise is clearly on display, and I like that kind of thing. I think it makes it fun. So thank you so much for that full rundown. It's like it was very clear and not intimidating. Sometimes people can get a little bit worked up about things like accounting and taxes and insurance and the business side of
Sure.
those things. All that stuff that's like the housekeeping things that we know we have to deal with and like don't necessarily want to because we don't know enough about that. So thanks
Sure.
for clarifying that and making that more like, human and reasonable. We have some
Of course.
questions from the audience. Let's go right away to that. Paul asks, insurance products cover is just for US, or could it cover operations abroad, Mexico, Spain as example? What happens if
So,
HQ is in US and has branches in other countries? This is really good because we have a global
yeah,
audience, and there's people here that aren't necessarily in the United States.
that's a great question. So obviously we are a US brokerage. The vast majority of our clients are US based. If you are a company that is based in the US, you have a US entity and you have other operations abroad, we certainly can work with you. If you are entirely abroad, we do likely have markets and potential solutions for you. It is not, we are not going to have necessarily the same breadth. And generally, we would recommend, we are more than happy to advise you, but we would also recommend, depending on how much of your services are done abroad, that you also consult with a local agent because, frankly, they might either have broader coverage or more expertise. That being said, that's not always the case because a lot of our partners, a lot of our insuring partners and specialists are also based abroad as well, and so they're able to offer us broader solutions internationally as well. But generically speaking, we're more than happy to give you the advice, and one way or the other, we can tell you who you should be working with. But if, let's say, for example, you are based in Spain, while we can likely give you some indication, we would also ultimately, if all your business is working with clients in Spain, you are likely better off working with a Spanish broker, just because they're going to be obviously much more in touch with the markets, if nothing else, geographically to your business operations.
Yeah, that makes a lot of sense. That's great advice. One more question from Will Gambling. You might know Will. Can you talk to what the typical process looks like to get insurance, like documents and company info required? What do they need to come prepared with, and is this a long process? Is this something that's kind of like, is it going to be a little bit of like paying up front, or is it pretty simple to get started?
Great question, Will. And it's no, the truth is it's relatively simple to get started. Obviously, there's nuance there depending on what we're looking at as your insurance portfolio. But the way to approach it, as far as the process goes, right? Typically, well, especially for startups and founders, the first conversation I have with them is understanding their business operation. So I don't have to put them in the driver's seat. I want to guide them in terms of what insurance they need, give them the explanation of what I walked them through today. Because that's typically how my first conversation goes with the founders. They ask, "Oh, what? I don't even know." They say, "I need insurance." Great. There's about 30, 40 different types of insurance policies we could write for them. But the process high level, right, is we're going to work through an application together, which is not a very onerous process. It's going to be mostly information that you have on hand and know for your company, especially at an early stage. Once we get the application, we are going to take that to market for you as your broker. And then we're going to start getting results back from the market. Again, depending on the complexity of the risk, we can, sometimes it takes a few hours, sometimes it may take a few days. Usually it doesn't take much more than that, depending on, again, if it's a market that is accessibly insurable and you're not doing something completely out of the ordinary of any other company that exists out there, then we're going to be able to get you, options within 24 hours or so. But generally speaking, it's not a very onerous process. Some of the commercial carriers, and depending on the nuance for startups, especially, can take 24 to 48 hours. But the process at a high level is going to be the application process. We'll go to market for you. We'll get you your options. And then from there, we just need to know when you want to start the coverage, and we take care of it from there.
That sounds pretty straightforward. Right on. So I have a question for you. Um, is There are different kinds of businesses. Do all like some people are solopreneurs and some people do services. There's SaaS products that where there's not inventory, like you had mentioned, inventory is a consideration. And then there's different kinds of corporations, right? Like is insurance, how would you does it do needs change based on what kind of company you have, or is it kind of like, well, there's kind of a baseline that all of them should have?
So it's a great question. So obviously the business operations itself are going to dictate the kinds of coverages you need. As you mentioned, right? If you don't have a physical good, if you're just a consultant, you're not going to need inventory insurance. As far as the type of corporation you are, that's usually not going to play a huge role in it. More so, it's to the point that how the language of the policy is scripted, especially as it comes to the regulation between being an individual or an LLC or an S corp or what have you. It's just how the policy language is structured. And again, as part of the application process, it's not going to have a. It's in most cases, it's not going to have a determining factor on how the policy is written or how coverage is applied. But it's part of the application process, again, as part of the disclosure of what the applicant is identifying themselves as and what entity is being insured at the end of the day.
Nice. Startups are a fast moving, uh, fast moving thing, right? Like they're like startups pivot, things change within the context of how they're working. They have all kinds of like they might have an influx of customers. There's lots of moving targets with startups, especially in the earliest stage, which is a large part of our audience. Uh, how flexible is StartSure or insurance in general in being able to respond to changing conditions where a founder might think, hey, maybe I'm not quite ready for insurance now because things could change in 2 months. I'll wait till then. What makes them need to take a move now and then with the assurance that they'll be able to adjust, or is it something that they should plan for in advance? How do you address the needs of startup
Yeah.
uncertainty for early stage founders?
No, great question. And it's exactly as you said, being a startup goes hand in hand with being often a high growth company and a company that can change very fast over a short period of time. And a traditional insurance policy, right, is written on a 12-month period. But what's very important is we're managing your policy. Obviously, as your company is growing, we know what we know about your company from the moment it was written, and then we're going to review it again in 12 months at renewal. And the renewal application process at the 12-month period, which typically starts 90 days prior to the expiring date. So really if we insure you on day one, right, 90 days before your policy expires, so 9 months into your policy, we're going to be looking and seeing how the business has changed. Have you tripled your revenue? If you tripled your revenue, are you working in new states? Have you added services and operations? Now, obviously, again, if you are adding services and operations, to your point, if you are completely shifting from being, for example, someone who sells socks to now you also sell cars, you have changed your business model. Yes, we're going to need to revisit your insurance as a whole. We're going to want to make sure that your exposures, as they're called, right, in the insurance industry, are properly covered. And that's something we're very adamant about at StartSure, right? With touching base with our clients, making sure we understand their operations. We have a very discourse-driven touch with our founder clients, especially understanding as their operations are shifting, and also to the point that I touched upon in the presentation, that again, like we've touched largely on when you need these coverages, but as your business is growing, how these individual coverages grow alongside your business as well. Because a general liability policy you get when you're, in your first year, you might need $1 million limits. In your 20th year, you might need $10 million of general liability. As the business grows, so should your exposure likely. And so will your limits and the protection that you need.
Very clear. Thanks. That's going to be a relief to a lot of startup founders.
Yeah.
On that same guide on speaking directly to founders and what is one of the biggest mistakes you see early stage founders make as they
Well,
are figuring all this thing out?
so there's the most common one, and then there's the most, let's call it severe one, right? The
Yeah.
most
Okay.
severe one
Let's
is
do both.
probably obvious. The most severe one's probably obvious, and it's just never getting insurance and just saying, like, well, I haven't needed it yet, and it's been 5 years, and then, you know, in year six, they have a claim and they didn't get insurance, so they didn't even bother to look at their insurance. Unfortunately, more than I'd like to admit in my life, it has happened that, clients have come to me after the fact of facing a claim And, we do what we do what we can, obviously, to ensure they get bolstered up and, protect from that point on, but the claim is still existent. And obviously no insurer is going to jump in after a claim's happened to protect that claim. And needless to say, like, that can be crippling, especially to startups, early stage businesses. The claims that can arise uh, obviously can vary grossly in terms of how severe they can be to a business's operations and their bottom line. So that is the most severe mistake. The most common one is simply not understanding the coverage, or saying, not understanding the coverage in terms of um, what is actually being protected, or having this discourse that I had today in the presentation to say, what coverage do I need, right? They approach me and they say, hey, Fabio, I need insurance. Oh, I had insurance, and then they say, oh, I've had insurance. Like, my building's insured. Is that the only insurance I needed? And it's like, no, well, you don't have general liability. You provide a service or you sell a product. If your warehouse goods are lost at sea or what have you, like, there goes $1 million of your inventory. No one's gonna pay for that. That's not covered by your property insurance policy. It's good that you're insuring your building that you're selling them out of, but there's obviously, and this is a partially a disservice of the insurance industry. It's not the reason I have a job as an insurance broker is to help navigate this. Insurance is not super transactional or super understandable. And my job is exactly to do this, to help navigate and approach the business owner, the founder, the startup, and say, okay, these are your business operations. We're going to need X, Y, and Z.
Awesome. Thank you for that explanation. I'd like to bring Nick Hughes on stage, our founder and CEO. Nick, great to have you with us. How's it going?
Hello. It's good to jump in here. Hey, I was a little late. Had another call and very important meeting that I had to take. But Fabio, good to see you. How you doing?
Likewise, great to see you, Nick.
Yeah, it's great to be here, and just want to jump in. And obviously, I didn't catch a lot of the early conversation, so I'm not gonna ask. I hope I don't ask questions that were already covered. But I think maybe an angle here, as I hear where the conversation is there a story that you could maybe talk about, or like an example of an actual success? Like, it's easy to say, oh, what happens when, like, can you name a time when when a startup or company did not have insurance, and oh, it's a big mistake. But does something come to mind where you're like, oh, we actually provided this, to this company, and it turned out that it really, we were there for them when they really needed it, and it was a very successful situation. So maybe just talk about an experience that you've seen in the market.
Sure. And as you pointed out, right, it's hard to view it as a success, of course, because being there to bear the protection of a loss is still a loss. And that they're not coming out the other end any better, but they're coming out even, right? But it's exactly that. Yeah, I remember early on in my career, I'd done some consulting through a personal mentor of mine had put me in touch through for one of his connections, and I was doing some consulting for this an early stage startup, and it was shipping services, logistics for products, and we had the whole conversation. They'd been running the business for about 4 years, and had been growing pretty steadily at a nice clip, but had never really, they had the bare minimum in terms of insurance. They didn't have any insurance for their product or their product liability. And they were expanding their product suite and were working in more and more states. Um, and eventually, I think it was in year 9 or 10, like they had a claim. They had a claim, but we had, fortunately, a couple of years before, had a very clear discourse. And the prerogative there was always, of course, like, they wanted to keep their insurance costs down. They don't want to pay the coverage. They haven't. No one wants to pay for insurance until they have a claim, right? And that's the story in a nutshell. Because, of course, like, what was fortunate was the conversation I had with him was like, look, you are growing, the business is doing well. you're in a great place right now because the business is doing well. If the business wasn't doing well, then you'd be on the downside. If you were staying flat, then we wouldn't be having this conversation, right? And you might be considering dropping the business altogether. But the business is growing quite rapidly, by the way. What you are going to pay in pennies for protection for the insurance is going to secure the longevity of this business. So, yes, you're not going to have a claim every year. I hope you don't have a claim every year. You better not have a claim every year. Otherwise, there's bigger problems than insurance at play, right? But now when you have a claim, you are not going to be crippled. It's not going to be game over. That's what insurance is there for, right? I understand people don't want to pay for something that they don't see the value of, day in and day out. But as cliche as it can be, insurance, what you are purchasing is peace of mind. It is a get out of jail free card, right? For these claims, which can be, again, devastating. I cannot tell you the opposite side of this scenario, Nick, is unfortunately the conversations again I've had with not clients of mine because I hadn't gotten to them in time, but they come to me after the fact and they've had that claim.
Wow.
They've had that claim in their business. They're essentially, 1 year's revenue is gone. They've just worked, their whole business for a year and haven't made a profit. So, of course, that's crippling for some business. That'll put some businesses out altogether. So, yeah, that's that's the story in a nutshell. So, yeah, of course, and of course, it's the joke I always say is, when I have clients, they ask me when they're reviewing certain insurance carriers that we work with, and they say, "Oh, yeah, I don't see a lot of 5-star reviews." When you have a good insurance experience, you are likely still not going to leave your insurance company a 5-star review.
Yeah.
But when you have a bad one, you are very likely going to leave them a 1-star review. That's just the reality of, again, how the product is perceived, because you're never going to come ahead of insurance. You're going to come ahead to your relative position to if you didn't have insurance.
That's interesting. Thank you. Thank you for sharing that. And for those of you all here, if you do want to ask a question, we're here. We love to open up the room, and feel free to type in the chat or raise your hand or whatever. But Fabio, like I'm gonna take a little different angle here in the kind of final few minutes. What if you're building a brand, you're building a company in a very unique industry, as you just kind of pointed out. And what have you learned about creating a specific set aside unique company, and you're kind of, you angle to startups, and this is a fresh view of insurance because let's just call it's a stale industry. It's a unique weird industry. So what have you learned of building thus far? And I think the lesson here is us founders we all have to differentiate our product and company in one way or another. So what have you learned around that?
Yeah, the simplest way, so to give you a little background, and like not just the brand's growth journey, but my own growth journey in the insurance industry, right? Is I started as a retail broker, about 10 years ago in the industry. And the reason I returned to being a retail broker is because I saw how the industry was shifting. After having done my tour of duty across the carriers and all the players in the insurance industry, what it came back to is exactly your point, Nick. Like, what did I see? What did I learn that I was like, okay, well, what's going to help me at the end of the day actually help the people that are purchasing this product? And what I learned is, again, like similar to what we discussed today, this is all about education. The number one problem is that the number one question I get asked is, Fabio, can you get me insurance? Yes, I can get you all sorts of insurance. The problem is we need to know which one you need, right? And so that is really the guidance. That is, again, the role of an insurance broker in the world today, is to help a consumer get to that, right? It's not as simple as walking into a store and you're picking something up off the shelf because you already know what you need. The number of clients, you want to talk about another like error, I see the number of business owners that unfortunately go and purchase a policy that is not what they need is overwhelming. And that's a dark a dark and unfortunate secret of the industry. It is very easy to purchase the wrong policy, and nobody is going to stop you, because ultimately you can purchase any of this coverage, but whether or not it's what you actually needed is a different question. So for us, the advisory comes first. The actual understanding of your operations comes first. The actual hand holding of, like, you're not the expert, we are, in terms of guiding you to the solution comes first. There has been too much of an onus in the last 15 years, especially with the advent of accessibility in insurance, where it's just click, 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 buy. That's not the end goal. That's not the end goal of what insurance should be. The end goal of insurance, again, is about an actual understanding of the risk and not putting the onus on the consumer, but on the actual advisor.
Yeah. Yeah. And what I hear on that, and, I feel like, Luis, we're kind of like, look, we've been doing this long enough, in the sense, we're turning 10 here, like literally this month, and certain things are becoming much more clear to me, because you do this for long enough. And we are now doing a lot of this, like you just mentioned, like know your customer, and actually, like, I mean, it's double, triple down on making sure that you know them well enough. You're asking the right questions. You're making sure that you're giving them the right product, not just a product. And, we're definitely doing this internally in various ways, which, in some ways you're seeing this, right? You're understanding this with us. And I just think, like, the lesson here for operators and founders is, outside of the, hey, it's probably a good idea to get insurance. Like, let's just, that's the way it is. It's a very important aspect of operations of a business. But from a standpoint of know your customer and dig much deeper than maybe the average company that's a competitor in your industry. Only good things are going to happen when you dig deeper with the people that you want to serve,
All right. No, absolutely. And that's the thing, is insurance should be tailored to you. Insurance shouldn't be pushed onto you.
So good. Luis, thoughts? And I'm assuming great job when I wasn't in here, but I love it. I love it.
Yeah, it's I love it when these things turn into an actual conversation, right? That's the point of the thing, right? We have the topic and we start mixing it up. Fabio, is in your experience, like, what's like is there a big mind switch flip that a founder might experience as soon as you turn on that one, you say this one line, or you like have expose them to some kind of story or something that really hooks them into realizing how important it truly is? Or is it just like the overall uh jump in the water with all of
I
it?
think so surprisingly, obviously, for a lot of early stage companies we work with, we're working with individuals, right? And they're one or two, person companies. And so, right, they fall into categories, right? And there are someone that is more or less risk averse, and someone that cares more about the risk aversion versus the bottom line of paying something out. And I totally get that mindset. But to me, to your point, in terms of, like, is there something that I found is compelling to them, again, is arming them through education. And the number one education I give them is I tell them what the benchmark is for the industry, and I tell them what their competitors do. I tell them what similar companies of similar sizes do. And of course, like, and it's not from well, Sally down the street is doing this and you should do it too. It's a matter of, again, giving them a sense of a reference point to understand this is what a company in your position typically gets. And I'm sure you guys in your own startup journey, right? You ask yourself, what do other companies similar to, to Founders Live, like, what did their growth journey look like, right? And you hit the 10-year mark. What was their 10-year mark? What do they look like? What did they look like? Is there something we're missing? Right? That is part of being a startup, right? And it's always about, you don't want to, in any aspect, not just insurance, you don't want to reinvent the wheel if you don't have to. You want to learn from your peers. You want to see what your peers are doing. And insurance is no different in that regard. And if you are missing, right, if I get a client, I get clients that come to me all the time and they say like, hey, again, like, oh, I'm a life coach. I've been doing this 5 years. I don't even know what kind of insurance a life coach needs. And I tell them exactly what kind of insurance. We insure hundreds of life coaches. I tell them exactly what insurance they need, right? And I say, and here are your options. Because then even within that mold, right, there are still various options. We have different types of life coaches. We have the ones that are more risk averse or less risk averse, understand where their operations are. And there's all the nuance there, of course, in the industry. But the conversation is always the same. And it's arming them with the reference points to say, hey, at the end of the day, like here's at least some benchmarks to give you understanding of as you're building this business, something you can tap into and consider.
Wow, that's super helpful. I love to have that. Nick, what you got?
Oh, well, I think we're pretty much at time. If we
We
ask
are.
another full question, we'll probably run out. So,
I know I've got a whole ton.
it's crazy. Fabio, we thank you so much for jumping in here, sharing your
Of course.
wisdom and your thoughts and talking about the offerings here. So people reaching out, and by the way, if you're listening to this as well, so maybe this is audio, so where can they go to find more information?
No, sure. You can definitely reach out to us either at our website, startsure.co, or shoot us an email at hello@startsure.co. Um, or, of course, reach out to the Founders Live team if you want any connection. They can connect you with us as well. But thank you all so much. It's been great. A great discourse. Great being, partners with you guys, and appreciate you setting this up.
Well, you're
Thank
welcome.
you.
Yeah. And hey, let's, Luis, thanks for jumping in and, just taking the lead on this. And hey, maybe I'll have more meetings going forward. So, you can
I
take it as
loved it.
well.
Yeah.
Good.
Oh, it's great. It's
Good.
great. Thank you so
Thank
much, Fabio.
And thank you everyone for being
Awesome.
here. Enjoy the rest of your day, morning, evening, whatnot. But many more Founders Live conversations coming down the line. Keep your eyes open for that. And with that, everyone, hey, just have a good rest of your day.
Cheers, guys. Take care. Have a
All
great
right.
week.